Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and we have the futures market open. We have the E-minis. It shows them as being up, but they look down to me relative to the, they're down. I'm not sure why this is saying up. Anyway, um, looks like futures are under a little bit of pressure this evening. So we'll go to those in a minute. We're going to talk about the Federal Reserve last week and their raising of interest rates, and why Peter Schiff's prediction about the monetary Roach Motel that the Federal Reserve has checked us into is in fact alive and well. And I'm going to play you a clip from Peter Schiff just before the first rate hike in 2015. The Federal Reserve raised interest rates for the first time in like 9 years. In December of 2015, they only raised them a few times because the markets couldn't take it, and you had the 2018 taper tantrum. So let's go to comments. Say hello to people. Franklin, it's crazy, isn't it? It did go by fast. Falcon, hey, brother. Talon, hey, brother. Trader Isaac, welcome. Lois, welcome. Larry from Louisville, countdown to Yankees home opener, 10 days, 5 hours, 56 minutes. On the ball as always. Hey, well, XBI? Okay, we can take a look at that. Okay, Jeff. Bob, guess who in the $4 in Riverhead last night out in the Hamptons? Oh, nice. Good for you. Really? It was on the $4? That's hard to find nowadays. Hope you filled up. Hey, Paul. TJ Burton. Hey to you. Hope you had a great weekend. Happy Sunday as well. Okay. So, for whatever reason, the futures are showing is up. But obviously we're under pressure here. Let's set our alert to let us know whether or not we are putting in a new weekly higher high. I mean, it was a very strong week last week. And there we have it. All right, let's move on. S&P mid caps, woof. They're down, but for whatever reason, it's showing us up. I don't understand this. Something's wrong with Thinkorswim. Obviously, you can see here, we're down relative to Friday's close. The percentage decline, not quite sure yet. The Russell 2000, let's go over here. Russell 2000, down as well. I think it's important to point out that on the intraday charts anyway, a lot of these indexes left the week overbought. So it's not going to be a big surprise to see a pullback tomorrow morning. That doesn't mean we can't close positive on the day. We'll talk about whether or not I think that this is a bottom in the markets and whether or not it's time to challenge all-time highs in a moment. Now the Nasdaq, it's crazy. All right, we're off the lows of the session, but it is showing that we're down. Let's go to the 30-minute chart. And we're challenging a breakout point here. Okay. So we want to know whether or not we fail to hold this breakout point. And one of the keys to confirming whether that's going to happen is if we take out session lows. Ugh, I always do that. Son of a bitch. This is what I always forget to do. At or below, Bob. At or below. Okay. One last time. I'm going to do this. One last time. At or below. All right. Oh, that's not working. Okay, that wasn't me. All right, good. Something's up with Tots tonight. Think or swim. I thought I was losing my mind. Okay, let's move on. Natural gas. You know, first let's go to the dollar. The dollar rallying. Check out gold. Yeah, something's very, very up with Thinkorswim tonight. It's showing it's down, and clearly it's up. So gold up. Bob, not sure if you feel the same, but many are calling the market bottom as of Friday, but expect one little pullback, then a 2-year bull market. Your feelings? I'll I'm going to come back to your question in a minute. I'm going to finish up the I'm going to finish up this here, the futures, and I'm going to come back to your question because I think it's a very valid question, and I want to give it thoughtful consideration. But I want to put my answer into context. So let me just go over a few uh, articles and some data that came out, and it's mostly about the Fed. It's obviously it's all about the Fed nowadays. Um, Big poise for a breakout. They want to add to your list. Okay, we'll take a look at it. My TDs. Oh, yeah. Okay, so maybe it's there where they source their data from. Hi, from Mark. Hey, Jim, how you doing, man? Cost. I would say it's possible considering there's a lot of money out there. Yeah, and we'll talk about it. It's certainly possible. I don't know it all for sure. Don't know it all. I can only deal. I can only play the cards I'm given. So I'm not as optimistic. I'll give you a little bit of spoiler alert there. About hope all is well. Same with you, Seymour. Okay, let's wrap up commodities. Gold coming off of its highs. For those just joining in, don't pay attention to the percentage change tonight because there's something wonky going on with Thinkorswim. Look at this, silver moving up nicely. Very, very nice. Let's check in with energy, light sweet crude. Oh, this looks pretty. Let's pull back to a 30-minute chart. Look at this cup, handle formation. Looks like oil is going to break out. So I would ask, and not that I want, I would ask that you folks keep in mind that that if oil breaks out here, it's while the Federal Reserve may back it out of their CPI data, they use the core, they back out food and energy because it's convenient for them, because they believe the uh, food and energy prices to be transitory. How often we hear about that nowadays? Uh, but the market's not going to pay attention to that. This is inflationary, and it appears as though we got a break last week, but the setup here is very strong, and it appears as though we may break out on oil or resume, not break out, resume the move higher. Natural gas, same deal here. You know, we have a cup handle. So we're looking for a breakout. Here's our resistance up here. Check in with Bitcoin. Bitcoin's dropping. Whoa, down 2%. Food prices. Food prices have seen a pullback these few days on the futures anyway. So corn down, soybeans, unch, not much happening here. Check the weekly chart on soybeans. Yeah, this is still a strong bull run. We're consolidating gains. We were overbought. We pulled back, and we just came right back. I mean, this is a strong chart. What was resistance back here acted as support for the past 2 weeks. It looks as though soybeans are moving up higher. Wheat was very extended. I warned about this. Unsustainable. We got to pull back. We may pull back further, maybe even down to what was resistance back here. 960, 961, the bushel on wheat may act as support yet again. Copper looking really good. Multi-week consolidation. Looks as though we're getting ready to continue the rally up higher. Up on the session. Okay, so I just want to check the euro really quick. Where's my euro? I forget it. It's not. Oh, it's wrong list. Sorry, folks. Wrong list. All right. So the euro is bounced back some, but still relatively weak. All right. Let's get to it. Okay. Economic data coming out this week. We have Monday, a bunch of Fed heads coming out. Not much. Not much going on this week whatsoever. That means the market's left to its own devices to divine what the Federal Reserve will do next. Initial jobless claims each Thursday, continuing jobless claims, durable goods, important number. My guess is that's going to correct. That's going to they're already forecasting a negative read on durable goods. My guess is it's worse than what is expected. Why? Inflation. The more money you see go into the supermarket and into the gas station, the less you're going to see paid out on durable goods. And we get UMISH sentiment survey. That's going to come in week. 5-year inflation expectations. All right. Not much going on this week. So the markets are left to their own devices to reflect back on last week's economic data, the Federal Reserve, their policy statement. So after this major correction, what appears to be a bottom in the stock market, the market must be a bargain. It must be fairly valued. Let's take a look. Buffett indicator. The market remains overvalued. We remain 53% above, or 1.7 standard deviations above historical trend. All right, so despite all of the pullback that we've seen these past few weeks, or not much has really happened in terms of a market that is priced fairly. It's still overvalued. So going back to, I'm going to leave this question up here from Falcon. Do I see a bull market beginning from these valuations? I don't. The Schiller PE ratio, we've hardly budged off the highs. We're still the second highest since the dot-com bubble in terms of valuation. So despite all the selling that we've seen, the market remains very expensive. There are other places where you should be looking. We have been buying Indonesia. We haven't been buying any more gold and silver, but we have big positions in those. So trying to stay away from net long positions in U.S. equities because they're too expensive. Our earnings coming out this week. I plan on playing Adobe, maybe Carnival. We'll check the premiums on those options. But Adobe, and when I say options, we're going to be selling premium, taking advantage of expensive options. So we're not going to buy the options because that's a bad move to do when you trade earnings, because the options are extremely overvalued. And even if you're right directionally the day after a earnings report, suppose you were bullish on the stock, you bet that the shares are going to move up higher, so you bought call options. Well, the shares can move up higher the next day. That doesn't make you profitable on your options trade. The reason is the implied volatility comes out of the option, and nobody wants it anymore because the speculators flee. So don't go buying them. Think about selling them. That's what we do here. And we did FedEx last week. We did very well with that, 100% profit on that one. Okay.
In interest rates than they were back then. So if the Fed raises interest rates, they're just going to have to lower them again and look like complete idiots, right? They'd rather look, not like complete idiots, but at least leaving interest rates at zero the entire time. So at least when the next recession hits, they can look like they were smart. And they say, well, see, we were right. We were cautious. And then they're going to launch QE4, which nobody really understands. I think it's inevitable. I said this from the beginning, right? I said it when they launched the very first round of quantitative easing, that they had, checked us into a monetary Roach Motel, that there was no way out. Once they went down this line, that we were in for the duration. You live by QE, you die by QE. I said we'd have more QEs than Rocky movies. And I think they had 6 of those. And
okay. So take note of this date. He recorded this on September the 24th, 2015. QE4, there was technically never a QE4. We're in it right now. It's never been named that, but he was right. We're in a monetary Roach Motel. The Federal Reserve does not know how to get out of this without crashing the economy, the stock market. But it's ultimately going to be inevitable, because I'll point to an observation that I made, and it kind of answered the question I had. I was asking myself, why did the market see so much volume. Well, not on the spiders. Was it this SPX? Yeah, this is wow, one big divergence, man. The SPX had a lot more volume on Friday than the SPY did. So the question I asked myself is why? Why so much institutional accumulation of the S&Ps? And it wasn't just limited to the S&Ps. You saw it on the Qs. You saw it on the IWM, the small caps. It didn't make sense, and then it dawned on me what had happened. So here's the Federal Reserve, and they raised their rates. The Fed. This is a chart of the Fed funds rate. Uh, we're above 6% on Fed funds rate before Osama bin Laden launched, and this is why I always say he won. He won. We have never ever come anywhere near going back to normal Fed's funds rates, and here we are. This little hockey stick was last week. This is when Peter Schiff spoke back in 2015. And we had a series of rate hikes. And then they had to cut them right away. And it wasn't because of COVID. It was because the stock market simply couldn't take the pressure of rising yields. So the Federal Reserve was very clear that there are more rate hikes coming. So I was kind of taken back about the volume and the massive move up higher in stocks. I said there's got to be a reason why besides a buy the news event. So the contest against inflation is being lost despite rate hikes, and that title of this article makes a lot of sense because I could point in one chart why the stock market rallied so aggressively last week despite the Federal Reserve's rate hike, the first time since 2018, and the promise of more rate hikes in the future. All you needed to do was take a look at their balance sheet and their statement. What had changed from, I was looking for their statement earlier. I wanted to get the Scribner version to show you. Maybe I'll remember it for next Thursday. So here's the Federal Reserve's balance sheet. And back in November, the Federal Reserve stated that, hey, come March, we're ending QE. We're not going to be buying any more bonds. In fact, we're going to be taking them off of our books. And we're going to be reducing our balance sheet. So when I heard the Federal Reserve, or Jay Powell saying there's going to be more rate hikes in the future, I was very surprised to see equities rally so strong. And then I took a look at this. Despite the fact that they had promised that they were going to be ending the purchase of treasuries, they did not. They continued to buy, and in fact, they expanded their balance sheet last week to new all-time record highs. And when you take a look at the Fed statement, what has been taken out of the Federal Reserve statement is a reduction of the balance sheet, and they're going to now wait until some point in time in the future to discuss when they'll begin that process. So what they took away from the market's punch bowl here, they're giving back here. If you would have seen a reduction of the balance sheet last week, along with a rise of interest rates, you would have probably not seen the rally that we had seen in the back half of the week. So the Federal Reserve, and that's the reason why I played this video from Peter Schiff, is that they're locked. They're locked into a monetary Roach Motel. They've checked themselves in, but they can't check themselves out. Why? It's because they don't want to take on the creative destruction that would come from allowing these zombie companies in this country to go bankrupt. 15% of companies out there should be bankrupt, but they're kept alive. They're kept on a lifeline vis-a-vis cheap money, and they're being able to roll over their debt. But once that party comes to an end and they're not able to roll over their debt anymore, that's when everything gets real fast. The other thing the Federal Reserve has got to worry about is that immediately following their announcement of their rate hike, the first since 2018, the yield curve, which has been dropping like a rock, and for those not familiar, it is one of the best indicators of when an economy is going into recession. Each one of these 5 gray areas is a recession, and every time the yield curve inverts, we are either in or will be going into recession. Immediately after Fed Chair Powell spoke, the bottom fell out of the yield curve, and we closed out last week at the lows of the week. So we are at a support level here, but if we break this support level this week, next week, the following month, whenever, it's not going to take much for us now to invert the yield curve. That will be a message to the market that, you know what, get ready, we have a recession coming, and the Federal Reserve is going to be very hard pressed to reduce their balance sheet and to continue rate hikes. And I mentioned this when I was on the TrendSpider Symposium back in, I recorded it at the beginning of February, and they published it mid to late February. It's on Twitter and YouTube. I mentioned that the 6 to 7 rate hikes were never going to happen. It wasn't going to happen. That's why you need to start looking at Bitcoin. You need to start looking at gold. You forget about these rate hikes. They're not going to happen. Why? The yield curve is inverting. And you have a midterm election coming up that if they continue to do as they promise, reduce their balance sheet, raise rates, the economy is just going to tank. And it already looks like it's going that way anyway. What's speeding up the process? Well, we can talk about when we believe that we're going to have a Powell put. But to get that Powell put, which he has supposedly taken away, he's going to have an excuse to come back big, really big, giving back the rate hikes he's provided the market, and to not only just continue with this maniacal buying of treasuries, but to now ramp it up even more and basically have this chart go off a cliff, off the page, with so much bond buying. So adding to his woes and pressure on the economy, existing home sales tumble on double whammy of soaring prices and rising mortgage rates. They raised 1/4 of a percentage point. Mortgage rates are ripping through the ceiling. And now you have this. I warned about this day one when they started applying these sanctions, and they didn't announce the SWIFT sanctions yet when I started pounding the table, because they were talking about it. But I said, if they do this, the unintended consequences are going to be massive. And we're already seeing them now. The US dollar, think about this. The US dollar was down last week when it should have been up. Now, you could argue that the fear trade came off. It came out of gold. It came out of bonds. It came out of the dollar. Okay, I'll buy that. But you would have thought that with the first interest rate hike since 2018, that the dollar would have been stronger. It was very weak last week. Now, if you want to argue that the fear trade is coming off a bit, okay, I'll buy that. that means we should have a week or two more of correction. And then because now we have a Federal Reserve that's quite hawkish, they're on the job. We're going to play their game. Well, we're going to believe what they have to say. They're going to be the Pied Piper. We're going to follow along. So you should assume that in the coming days that the dollar is going to correct. It will consolidate, and then it will resume its trend up higher because we're one of the only few Western countries now raising interest rates. But that's probably not going to happen because all you're going to see now, this is Deutsche, they're saying now what I said weeks ago. They will have a negative impact, meaning the sanctions on the West. The Chinese and the Russians have been de-dollarizing for years now. They've been prepared. We have not. The analogy that I draw is that the West are a bunch of indebted 500-pound apes looking to attack the new boogeyman, which is Vladimir Putin. But Vladimir Putin happens to be a master in judo. So he knows how to use the weight of the West against itself, and it's doing it right here, right now. Even Jim Rickards, I'm a big fan of Jim Rickards. This was the last straw. Now that the U.S. has frozen the reserves of the Central Bank of Russia, this is the last straw for Russia and the world. That's his conclusion. I don't know how we get past this. I don't see how it's possible that we did this to Afghanistan. Now we've done it to Russia, which has more reserves, 100 times the reserves than Afghanistan. And you take a look at the digital dollar, which is making its way into reality. You've really got to start looking outside, as the world is coming to realize, outside of the SWIFT system, outside the U.S. banking system. And he's right here. Putin blames Western ruling elite. I hate when they call these people elites. They're crooks. They're thieves. Putin blames Western ruling elite for global economic problems. No doubt about it. What did Russia have to do with the blow up of the banks back in 2007, 2008? Nothing. And one of the playbooks out of the digital dollar, and this is all led by the World Economic Forum, the Davos crowd, the so-called elites. They're communists. That's what they are communists. And one of their playbooks has been, you remember this broad from up in Canada, Christina Freeland. She is one of the young leaders of the World Economic Forum, as is French President Macron, Canadian President Trudeau. They're all part of this World Economic Forum, the Young Leaders Club. So one of the things out of their playbook, remember the phrase, you'll own nothing and like it. Well, what she did was she took one of the tools out of the toolbox of the World Economic Forum, thanks to Trudeau and Freeland, setting the precedent that a so-called Western G7 democracy can seize its citizens' bank accounts with no due process and no appeal for the crime of demanding the reinstatement of their civil rights. Think about this. Nobody's upset about this. Very few people. The media, of course, they're not going to talk about this, but not many people are talking about it whatsoever. What do you need to own? You got to own Bitcoin. You got to. And it's pulling back. Tomorrow I get my deposit, my weekly dollar cost averaging of Bitcoin tomorrow. So I'm getting it cheaper. Good. What else do you want to own? Well, do what the big banks are doing. Banks are restocking gold at the fastest pace in years. Look at this. What you got to follow the banks. And you can't buy the digital. You can't buy Comex gold. There's no gold backing that. There's not enough gold. You got to own the physical. You have to own the physical. That way they can't seize your assets. They'd have to come to your house, find your gold, and take it. So you got to own crypto. You got to own eggs. Eggs prices soar as highly pathogenic bird flu spreads ahead of Easter. This was going up way before this. Is just another fear porn article. But we own this company. We've owned this for well over a year now. This is Cal-Maine Foods, a little egg company that could. Now, I wouldn't buy it here. It may shoot up higher. We'll probably see RSI 90. We have RSI 83.73. I'm going to look at scale out or maybe buy puts as a protective hedge on the position to avoid the capital, to avoid the taxes. I may just buy the puts. And the reason why we bought this stock was that we built an inflation portfolio. Gold stocks, silver, gold now, physical, food companies, Cal-Maine Foods, uranium. These are all positions that we have, and it has allowed us, besides our option writing business, has allowed us to outperform the S&P 500 for the past year, well outperform. Our inflation portfolio was going exactly the opposite of what the S&P 500 was doing all of 2022, not to mention the options trades. So the reason why we bought this trade or this stock was, it was a play on inflation. Well, you take a look at a quarterly chart, look at this breakout, look at the multi-year consolidation and now the breakout. And you drill down to a monthly chart, a multi-year breakout on egg prices. Now, we are very overbought here. Do not go chasing it. We're going to correct here fairly soon. So I'm going to have to take some defensive action, either booking profits or buying puts to protect my position. But I think longer term, we are going a lot higher here. With that, I think I'm done. Let's take some... so to go back to Falcons, I know this is why I kept it up here, so I didn't forget. So I'll reread Falcon's comment, question. Not sure if you feel the same, but many are calling for a market bottom as of Friday, but expect one little pullback, then get a 2-year bull market. Your feelings? I'm not going to be surprised to see the markets move up higher from here because it's clear the Federal Reserve, while they're hiking here on the Fed funds rate, they're going to continue to buy and offset the rate hike. They're going to provide liquidity. And they're going to allow for the $1.7, $1.8 trillion budget, which nobody talked about, got passed in the middle of the night last week. So, can the markets move up higher? Yes. The problem's going to come when inflation is not going anywhere anytime soon. You may see it come out of durable goods, but food and energy prices, they're going to continue up higher. So the money that helped fuel, that retail investor that helped fuel that COVID rally, that's not going to be there anymore. They got wiped out in the correction of 2022. So what you're hoping for are new investors and institutional investors. Now, you may have institutional investors that continue to pile into equities until such time as this has to come to an end, and this has to continue up higher. The problem is that when that occurs, things get real fast, and the US dollar is going to tumble, and the S&P 500 is going to take a swan dive because inflation is a tax, and you need capital to fuel these companies. But if inflation is destroying the middle class and even more so the underclass, the lower class, Well, what's going to keep the economy going? It can't just simply be the rich. So longer term, I'm bearish. And when you do get this big collapse in equities, then you're going to see the power put. That's when he's going to come back in. And then they're going to give back any and all these rate hikes, and they're going to take this and they're going to blow this through the ceiling. Because again, going back to Peter Schiff, we are in a monetary Roach Motel. We've checked ourselves in, and there's no checking out unless you have creative destruction. That means you need to allow the weak to fail. Meaning, I'm talking about companies that are out there, zombie companies. They have to fail. That flushes out the system. But we don't want to do that anymore. They talk about universal basic income. Here, stagflation trap will lead to universal basic income. This is another plan out of the World Economic Forum, the Davos crowd. They want people on welfare. Folks, corporations are already on welfare. They have been since 2000. We left the free markets back in 2000 and we went with a debt-driven society. We no longer have a free market. Let's do some chart requests. Franklin, I got you. NTR. I had to go to the members area and see if anybody popped anything in there. Bear with me 1 second. I should have this done before I go live. Yep, good thing I checked. Okay. GGB for Jeff. Okay. All right, let's do this. Let's go to comments first. Make sure I'm caught up. Louis. LABU, Louis? I know you like that one. LABJ? Okay. Yep. Now I see it. Okay. LABU. That's what I figured. Paul. KR. Daily Bull Flag. Okay, we'll check that out. Does it benefit? This is Kroger, right? Does it benefit? Yeah, their margins expand. The food prices will go higher. Whatever margins they had, they'll make it back on food prices. So yeah, they'll profit. That's why you want to own staples. Juniper. Yeah, Juniper. What was I looking at? Why would they? Oh, they were in Investors Business Daily over the weekend. A good setup on Juniper. I didn't check it out, but we'll check it out now. Talent. You got it. You got it, Talent. Apple. Yeah. So Paul. Yeah, they'll do fine. They'll do fine. Those businesses people have to go to, right? You don't have to go to Starbucks, but you have to go to Kroger. You could buy a coffee, make it at home, but you're going to buy it at Kroger. You're not going to do Starbucks as much. Louis. Okay. I'm going to cut it off there. All right, let's do it. XBT. XBT. Oh, this is a crypto? Yeah, I'm not getting that symbol. I'm not. I don't do cryptos all that much on. Where is it? I literally have no. I can't pull up that symbol. Sorry to do that to you. I need a special symbol, and I literally have no more writing on my keys, so I can't find this symbol. I got to click. Oh, here it is. Wait a minute. Hold on. Let me see if it comes up. I don't know if this is the right one. I'm going to pass on this one. It's going to take too much time. There are way too many symbols here for this crypto. I apologize. I'm going to have to pass. The only two I deal with is XRP and Bitcoin. Not that you can buy XRP right now here in the United States anyway. All right, Costco, bullish. It's going up higher. Long story short, it's going up higher. Um, let's watch for a retrace this week. Stokes hooking up, loving it. Folks, this is TrendSpider we're using. If you were eyeballing Costco, you would have known that it broke out here because the automated trend lines would have told you. This hammer formation, continuation breakout the week of the 28th, and last week, massive move up higher, daily chart. Love the breakout on Thursday, retest on Friday. Costco's going up. It was up on volume too. I like it, bullish. I may even sell puts on Costco. Note to self. Okay. Big lots. They should do well in this kind of an environment. Your dollar stores, big lots, outside reversal bar last week, bullish reversal bar. This looks really good. Nice. This is a monthly chart. I'm liking the setup here. We're very close to a breakout on a monthly time frame. Again, automated trend lines, folks. Click of a button. 35% discount code below TrendSpider. Daily chart. And this is a way to tell you avoid, okay? Automated trend lines telling you you got resistance immediately above. What's the play? Two ways. You got to wait for a breakout. Or another way to play it is if by chance we retrace back down to support down here, keep a little bit of sensitivity. There we go. That's good. Okay, so you can, if we don't get the breakout immediately and you want to buy on the closing breakout, if by 9:45, 10:30, 12 o'clock, 1 o'clock, we're trading above this resistance level at around 20, 30, 39.50 per share, I don't care. I care where it's trading at 3:55 in the afternoon to make sure that it closes above that resistance level. Then we pull the trigger on it. Or wait for the pullback. If we don't get the immediate breakout, suppose we get rejected, wait for the pullback down here to around 35.50. I keep saying 20, 35.50 per share. Big lots going up higher. NCR. Nutrient Limited. Weekly chart first. This is impressive. This is very impressive. You may be wondering, why am I saying impressive when we were down last week? Well, many times when I see candlesticks ripping through the third standard deviation Bollinger Band, soon thereafter, my next words are, this is not going to end well. And what we did is that, yeah, we got a pullback, but we rallied and we closed just down slightly on the week. So fairly good price action. I don't like the fact we couldn't close positive, so I don't think we're out of the woods yet. But I'm more bullish, far more bullish than I am bearish. Daily chart. Yeah, we broke out on Friday. Take your crayon out. Pop, breakout. It's going up. Bullish. GGB. Ooh, nice chart. Very nice. Look at these Bollinger Bands opening up. Nice. Very, very nice. So we broke out here the week of the 28th of February. Consolidation. Every time they try to knock it down, buyers stepped in. This is the market sending you a signal that, hey, psst, there are buyers down here. Don't sell anymore. You got to be a buyer. These are clear and defined signals that this stock wants to go up higher. Daily chart. We have a little bit of resistance up at around $6 per share. 604. I think we're going up higher. Bullish. LABU. LABU, we've done very well with. And we plan on continuing to trade it. We have a position in it now. Let's go to the weekly chart first. So the weekly chart is a major, major tell. Multiple weeks of trading sideways, lots of volatility in here. Last week, we took out the lows of the year, past 2 years, and then we reversed to close higher. That's a bullish key reversal bar. That's a powerful signal by the market that, hey, we're done going down. And we're probably going up higher in the coming days. Now, the daily chart looks very, very good. But we've had 4 consecutive up days. I tried to resell some puts. That's a bullish position. Selling puts is a bullish position. I'm the underwriter. I'm the counterparty to put buyers. And they wouldn't give me any premium. I couldn't get any premium. So I said, screw it. I'm not going to do it. So there's not a lot of confidence that these shares are going to pull back anytime soon. I kind of question that. Because when you go to the intraday chart, I'm not a day trader, so I don't know why I'm on a 3-minute chart. We'll go to a 15-minute. You can see that we had a powerful rip. You know, we may just go head up higher here. Now I'm double thinking it. We held all of these gains. I have a recency bias. Last time I looked at this chart seriously, we were very extended relative to the third standard deviation Bollinger Bands. And I expected a pullback. We got the pullback, but we're just trading sideways here. Now, we did break down on a 15-minute chart, so I wouldn't go buying until we broke back out. We got a new weekly high on LABU. But if we do, by chance, happen to pull back, I'll be looking to buy LABU. I think it's just a rock-solid chart. There's going to be a lot of backing and filling. There's not a lot of momentum here yet. These are the early stages of a longer term recovery. It's been in a big bear market. So we're going to keep doing what we do. And if we buy the common shares, we'll sell calls. If we sell naked puts and we don't want to roll them out, we'll take the shares, we'll sell covered calls against it. It's just a good stock to trade and generate cash flow. You bet, Franklin. Anthony, I didn't forget about you. GGB. I have you down here. I have that on my list. Did you ask for that or somebody else? All right. MULN. I'm going to shut it off with MULN. Falcon. Yeah, Falcon. Thank you. Folks, if you could please smash that like button. Thank you very much, Falcon, for reminding me. I'd appreciate it. It helps me out with the YouTube algorithm. Something awful. And thank you for being here. It's my pleasure to be here. We have a bunch more symbols to go through. So stick around and smash that like button. Leave a comment. I never get much comments. AMD. Let's go to the weekly chart. AMD looking good here. Good looking chart. We're consolidating. Daily chart, we do have some resistance above here, right? So we'll take the automated trend lines off, and there you go, click of a button. So if you see a breakout on AMD, and most importantly, that we close there, buy. We've stalled here multiple times in the past, back here, here, here. Wait for that breakout on AMD. Otherwise, I think it looks good. It's probably going up higher. AMAT. Let's do the weekly chart first. Weekly chart, looking the bomb. We had a breakout last week. Big breakout. And I'll tell you, if by chance they retest the breakout point, I'd be a buyer. Daily chart. Daily chart, you got a bit of resistance up here, as noted by these volume shelves above. But it's looking good. I think AMAT's going to get resolved to the upside. KR, do we have a bull flag setup? Yes, we do have a bull flag setup. As a matter of fact, the automated trend lines picked it off. So Kroger moving up higher. That's the daily chart. Weekly chart, we were overbought. We're pulling back, consolidating. Kroger's going up higher. Juniper. Weekly chart, Juniper. Love it. Outstanding setup here. Bullish. It's going up higher. We broke out on a weekly time frame. Daily chart. Daily chart, we broke through not one resistance level on Friday, but two. We should get a retest here of this breakout point. I'd be a buyer on a retest of the breakout point of Juniper. Looks good. Looks very, very good. These are some great setups you guys brought to the table. Apple. That doesn't look right. Oh, this is the Apple VIX. You know you're a successful company when you have your own VIX. I'm surprised to see this chart looking so bullish with the shutdown of Foxconn over in China. Apple's going up. Apple's going to break out. I'd be a buyer here. I'd be a buyer here. We broke out on the daily chart. I would add more, though, on a breakout above this resistance level. Setting the stage for a rally to new all-time highs on Apple. I don't want any sensitivity. Let's bring that to 0. Why can't I bring it to 0? There we go. Now it's at 0. Good. Bob, did you see the Yang daily chart last week? Yeah, I'm sure it was because those Chinese stocks were very, very oversold. You too, Lewis. My pleasure, my friend. Thank you, Franklin. See you in the money circle. See you there, pal. The money circle. I like that name. I like that name. That's our private. We do private video conferencing for members. So if you're not a member, sign up. 14-day free trial offer. Also, if you're not a 14-day, you're not ready for the 14-day free trial offer, check out my YouTube playlist, Premium Unlocked. That's my older commentary from members only. It's now released. In fact, I'm going to release tonight. Last Saturday's the week ahead commentary. Check it out. Expect that. MULN. We're going to leave it off with this because I'm running over here. MULN. Nice. Stop going down. This is a monthly chart. Shaping up. I think the sell-off is probably over here. We're in the middle of a middle of a trading range. So we're still in a downtrend. And that downtrend's got to be respected. $3.09 is critical resistance. It's a buy on a breakout and a close above that mark. Then you're going to have more resistance levels up top at the $4 level. But I do think that this stock is going up higher. Daily chart. All right, so you have resistance up here. Allow for a pullback, unless, of course, we break out above resistance. But you're clearly seeing a rejection at this resistance level at around $2.06 per share. So wait for a close above that mark if you're not long of it yet. You're also flirting with the rising third standard deviation Bollinger Band. In short, you're not supposed to be there. Wait for either A, a pullback, and or B, a breakout, nibble, open your position, leg in, all right, scale in. All right. All right, Talon and Frank are going back and forth. All right. You're welcome, Trader Isaac. See you on Thursday night, my friend. That's right. Yeah, Zim. Zim pulled back, right? Let's bring that up. Kind of figured they would. Yeah, they did pull back. They broke down. Zoom broke down. All right, with that, folks, thank you so much for being here. It's my pleasure to be here and spending time with you on a Sunday night. You could be doing a lot of other things, but you're here with me, and I appreciate it very, very much. Smash the like button, subscribe to the channel, TrendSpider, 35% discount code below. I give it away free to silver and gold level members, 14-day free trial offer. Thanks for being here. Have a profitable trading week. Be well.